Welcome to Coffee for Closers. Today, again, I've got Mr. Tony Drossi back in office. We're talking his tax time again. We're talking more about taxes. Last time, Tony, you were in, we were talking a little bit about just the idea of why you would open a tax practice. That was what we did. You may not even remember. That was a year ago we did that. But this year, I think the most important thing we can accomplish is explaining the sales process, really, right? Like how you convert from a 1040, which is really the backbone of the tax model, why we're doing it in the first place. But really analyzing, getting familiar with the documents, understanding the conversion process, tax client to financial client, where it comes in. And so we'll go through a number of examples today, and we'll talk a little bit about, before we get into all that, just the process or the thought process of the consumer and how you kind of get them adapted to your process and why you would be talking with them and so forth. So anyway, thank you for doing this. Obviously.
Certainly glad to be here.
So let's start at the very beginning. Maybe not the beginning. They've come in. Let's talk about the journey of the prospect. Prospect comes in. They're signed up for a kind of a cut rate tax return in most cases for guys that are starting. It's more cut rate as they get bigger. People tend to start increasing the prices, right? But the prospect comes in, they're getting their taxes done. They've sat with a preparer for maybe one or two appointments. They've sat with the preparer.
Usually one appointment,
and they've submitted all their tax documents. So upon booking the appointment, the reception told them to bring certain documentation with them. They've brought it. They sat down with the preparer. The preparer collected the data, let them know to come back.
That's right.
And sit down with somebody, right?
That's right.
And so now is the question that I get a lot from advisors that are starting tax practices is, what do we do from there? The preparer is not in a position to sit down in most cases and explain maybe the issues going on with their tax return and where they might be able to do better and the reasons why they might want to talk with the owner of the practice. They're not up for that, right? They're not versed enough to do it. And so the model tells the owner of the tax practice to take the delivery appointment and start to have those conversations, right? But it comes up a lot as like, how do I explain it to the client as to why they're sitting with me now rather than sitting with the tax preparer themselves that they got to know in the last appointment? And so we'll start there. Like, what do you guys do at your practice to overcome maybe the initial objection of, I thought I'd be sitting with so-and-so tax preparer today?
Sure. Yeah. So that process kind of is more on the front lines where the preparation's done. Mm-hmm. Then my staff has to call them to say, it's time to come pick up your tax return. It's ready.
Sure.
And what time works best for you, that whole deal, and schedule. And they say, well, I just thought I'd drop in and pick it up. Say, well, no, we actually have a process here, mostly from quality control, just to make sure before we fire it off to the IRS that it's accurate. So we just set a quick little appointment like you did the first time.
Yep.
Well, I just dropped it off this time. Say, well, okay, very good. But there are some things before we do this. We're going to go ahead and sit you down and make sure it's accurate.
Sure.
So they set the appointment.
Okay.
Right?
Yep.
So we do. They come in. They sit down. They might have seen me in the office before or not. I just simply give them a little 411 of who I am.
Yep.
I'm the owner here.
Yep.
Just want to thank you for having your taxes done here. Was the staff cordial? Did you enjoy? Was the process okay? And it really, yes. Say, okay, well, what we're going to do before we file it off is make sure it's accurate, that we agree. I mean, they have to agree.
Yeah,
right?
Sure.
But then I start talking to them about if there are ways to save on their taxes. I inform them the whole process. The IRS already knows what they are doing. Our job is to report that accurately. Mm-hmm. But then if we can change that and alter that data to your advantage from some tax planning prior to this, and their wheels start turning, like, reduce my taxes? Mm-hmm. How can I do that now, right? And you don't let the cat out of the bag. You ask if we could change these stars right now, reduce your taxes now before we do that. Mm-hmm. Is that something you think would be a good idea?
Yeah.
And of course they're like, well, of course I don't want to pay.
Are you saying
taxes.
this in the appointment with
Absolutely.
them? Right, so this is they're
in my office, and I start asking. I give my little thing where I put my hands like this and I go, the IRS, if they see this, things not lining up,
Yeah.
you're going to get a love letter from them,
yeah.
right? I said, so our job is to prepare a tax return that looks like all the documents they already have.
Yeah.
Right? If that's okay, everything's hunky-dory. But if it doesn't, you're going to get a love letter
Yep.
and better make it right, right?
Yep.
But so we strive for accuracy. We're not perfect, and I said, but if we could change the data they already have by doing certain things right now, and you wouldn't get the love letter and save on taxes, do you think you'd want to sit and talk about that? And that just opens up the conversation, well, like what? So I dive in before I get to this point though, Alex, I always take those, my pre-appointment files.
Yep.
I comb through them and get to know them.
You get familiar with everything.
I get familiar with them. I look at the data on the return, and I look at the supporting documents, and then I start seeking from that point, what are my conversation points before that person's in my office? Because it's such a vast array of different scenarios, whether they're 45 and working, whether they're 75 and taking RMDs, or anything in between there. A lot of different scenarios, and that's why we're going to go through. But you have to be prepared, and kind of know what your talking point is for that person that you're going to be able to help them with, to set it up for a follow-up appointment that you can help them with. Okay.
Nothing's really going to substitute for knowing the 1040, right? We tell advisors getting into the tax practice world that you don't need to know how to process taxes. You got to be familiar with that document pretty darn well.
Certainly.
So let's assume that everybody watching understands that. Again, like you said, we'll walk through each of the documents and some different examples and such. But it sounds like it's like get what's in the way out of the way right out the get-go. Explain to them who you are, why you're sitting down, doing quality control, and then basically talk about the savings that potentially could happen.
It is, and in this business, you led off by saying a reduced fee tax prep service, right? You hear cheap, you hear, it's like, well, what I start turning the table on is the word value. Right. I want to present value. I even say, just so doing these tax returns, I know hopefully we treated you well, different than your experiences in the past, but what we're going to do is share with you some value of tax prep, because it isn't rocket science. Right. Yeah. Anybody can put the data on there, and anywhere you go, it should be accurate. We just don't feel like overcharging people for that. Yeah. But where's the real value? And that's, you paid us X amount of dollars to prepare the tax return, but by doing tax planning and pre-planning, it can save you thousands, if not tens of thousands of dollars each year and into the future by knowing and understanding where the source documents are coming from, where the transactions are coming that go on, and all we're doing is reacting. Yeah. We want to pre-plan where the 1099s come from each and every year as a relationship. And that relationship starts with asking my advice, not my permission. So when you want money, you need money, that's where you'll know where that tax and what the taxes will be on that sources of money. So I kind of set it all up and talk about that stuff. And of course, here comes we already have a broker. What are you trying to sell us? Right. So you get all that and you say, look, folks, I'm not here to sell you anything, but if I can provide you some value and show you some things that aren't working for you, it's right here. You can argue if you want, but it's right here on the documents.
You're dealing with the facts.
Something didn't go what could be better for you. If you're okay with that, we're good. Give us the money, pay for the return. We'll see you next year, and we're glad to have you back. Right. That's it. Sure. Right. And they go, what kind? Then it comes full circle. Well, what are you talking about? What you could save us on taxes now? See where it goes now. I go. So my goal is only not to say to let the cat out of the bag, but my calendar is packed. This is not the time for this. We're going to set a time to come back. We'll discuss what you could be doing right now.
Would you have them come back like after tax season? Is that kind of what you're saying?
No, you come back depending on what it is. So we'll get into that in a minute here with some of this stuff.
Sure.
On where I can maybe help them right away. In that first tax return we're going to go over is that data, that information, familiarize what are their ages and what can we do right now. You leave, set an appointment. And I think we talked a little bit about this, but as they're leaving, do I have the skill set to go into my computer and for me to set an appointment?
Sure.
Of course I do, right? However, what I hear is out in my lobby, and you've heard this before, people want to do business with busy people.
I agree.
Right? There's a buzz going on out there. I say, let's go out here. We'll get you in a follow-up appointment here in the next 7 days, right? And we go out there and I explain to my staff who's going to set them appointment with the entire crowd in the audience listening, going, who's that guy?
Yeah.
And so just we're going to follow. We're going to help them save on some taxes, whatever it might be. The conversation is get them back in next week. By the way, bring XXX with you when you come back, right? And I leave. I grab my next file. I grab the next person waiting, and off I go again. Yeah. And everyone's going, how do I go see that guy? How can I save on my taxes, right? Yeah. And that's kind of what's going on in their head.
Charade you're putting on, or like you're acting in front.
A little bit, but it's not to the charade, animated. Yeah, you're right though. But it's so what can I do to get help also? Because usually I just go and get my taxes done. Yeah. You know,
I want advice. I've never gotten advice.
I've never gotten advice. All I do is a transaction, and that's again when each season. I'm sorry, but as old as I've been doing this and long as I've been doing this or whatever, I have to kind of hone my skills in on hone them on my first couple of appointments on the talking points again. And it just kind of flows like water after a couple of appointments to get back in the groove, you know. Yeah. But it's they're buzzwords and talking points. And when you do something, wouldn't you rather have some value placed into it? For sure. So that's where this tax preparation is. You normally have a transaction, you exchange money, give me my return, I get money back or I owe money, right? Yeah.
But for some, it's in and out kind of process, though. That's right. And for then the others,
for some it is. That's right.
And maybe even explaining that to clients, it's like, you know, right. For some it's that, but we see the point of sitting down with our clients, and for those that particularly might have a situation, we want to sit down and make sure they're aware of their situation.
Right. And in my office, almost every single year, with the new ones coming in that I've never seen before, I go out of my way to make sure that they get to visit with me.
Oh, okay.
I book them a 15 or 20 minute delivery appointment, just a touch up, a conversation. Welcome to the fold here. We're here to help you. We don't close the doors on April 15th, you know, a little commercial, if you will. There may not be a whole lot there. Again, I've dug into everything here. Yeah. Ask a couple little questions. It's okay if they're broke. It's okay. And I can't help them right now. Come back in. We're here to help you.
Well, we were talking before you came on was the inheritance. You know, that's right. Some folks come into an inheritance. They're the first person they're calling is you.
That's right. And that's where we just want to be that go-to, and they bounce a question off because, like I said, ask my advice, not my permission on anything. Sure. We don't charge fees just to visit and stuff. So just talk it through, because anything to do with money, you're going to have to talk about taxes at some point.
For sure.
Right. Yeah. So.
All right, let's jump into the W-2 then. Okay.
So when we get the tax return, you'll see the tax return on there, and you get familiar with this person. They're in their upper 50s. They work for a corporation. They're getting their W-2, and if you'll notice on that W-2, they've got gross income and wages of $145,000, but their Social Security, of course, being familiar with that, is Social Security cuts off at a lesser amount typically. And then you go down into box 13 though. You'll notice in this particular W-2, there's no boxes checked off there. Okay. So since no boxes are checked off, number one is that retirement plan box.
Right.
So you can say at this point, are you new on the job? Did you recently switch jobs? I noticed that they don't offer any benefits. Yeah. It turns out, you know, remember, they're 59 and a half, 61, 62. They're 57. What about 59 and a half? Where is that so important? Well, it's not now because this is a new job. No benefits. When did he transition? Well, what do you do for a living? Well, if you're making 145, you're generally a professional of some sort.
Sure.
Right?
Sure.
So what about that 401k? Yeah. Well, it opens up conversation to have one that they still have, did nothing with it.
It's from a past employer, and you wouldn't see it here because it's a current employer.
But the current employer doesn't. And I say, well, what was the best thing about having the 401k? Well, it's saving for my retirement. But it also, I think it helped me like on my taxes or something. That's right. It did. So you see here, you got full gross wages and fully taxable wages. But if box number 12 down here had the D, or another number there, it is you were contributing to the deferred comp plan of some sort, a 401k, and you would reduce your taxes, right? But today, since you're not one of those, if you were able to contribute from your left pocket monies that's in savings to your right pocket right now, let's go to your tax return. So you go over to that tax return. If you'll notice, there's a place where you can have deductions for IRA contributions on the tax return. That's an immediate, those are refunds, that's on the worksheets, but you can contribute to an IRA. And this is where being familiar with, in my office, I always buy my tax preparers what's called the Quick Finder. It's just a nice little cheat sheet of what and who can do what based on thresholds.
Okay.
So if you looked at the 145 and that box on the W-2 was checked and he's contributing there, he can't contribute in the outside world because he blew out some AGI thresholds. So familiarize yourself with those thresholds. But if they're not able to contribute here, guess what they can do? They can do a frontline IRA contribution for them and their wife, pull that money off the tax return at 21%, right? And contribute to an IRA now before we file this return and put another couple grand back in their pocket.
Huh. Okay. That's interesting. So you can do that, like, this is for 2021.
That's right.
It's 2022 now.
Right. So that's where in that, they go, hold on a minute. Yeah. Nobody's ever talked to me this. Nobody understood. What are you saying? I said, do you have money in savings? Well, if you look up here, $900 on the return is some dividends, right? They have money that's non-IRA.
Sure.
What is it? How much is it? I don't know. But bank accounts pay 0.0001 right now. You're not going to see the cash they have on hand. So they go, well, yeah, we've got emergency savings. And so you can contribute right now because the books are closed for most things on December 31. But for IRA contributions, that book is open until April 15th. So you can actually have a retroactive event. Remember, this stuff's not going to line up with the IRS I showed? Well, it won't line up. But when you provide the supporting documents that you contributed to an IRA, it will reverse some of that data that's been reported to the IRS and reduce and give you tax money back now.
Interesting.
Okay. So that's where knowing and understanding, but remember in the back of your mind, where's the real deal is that 401k that he has land from the previous employer. You're helping and showing value today for a low price of tax preparation, right? To, as you walked out there,
position yourself to potentially start talking about that 401k.
That's exactly right. But I provided I charge $129 for my tax return. Okay, that might break all the rules here, but that's what I charge. And they go, but I just saved you $2,000 of income tax right now.
It's interesting.
That's where the value play comes in.
So they take that $2,000 from their savings account.
They put
it into their Roth.
Okay,
so
here's where the play is. As I teach them to the maximum funding of an IRA based on a couple.
So yeah,
you take X amount of dollars from your left pocket is what I teach. You now put it in your right pocket called an IRA. I'm a 65, so I can actually open up the money market IRA right now. Okay. They're not going to make any interest on it right now. It's safe money right now. It's available money right now, all liquid. Right. They're just going to get a $2,000 bonus from the IRS for the tax savings on the IRA contribution. Right?
I gotcha. Yep.
So now they get that money back from the IRS.
Because they paid the taxes on that money already.
They already paid the tax.
Because it was going into a IRA.
Yeah. So we're reversing that process now, putting it in and funding the IRA. Now they're making a couple of grand for what? The tax return process here.
And they wanted to do it anyway.
They just
didn't have the availability.
Because the new employer doesn't have a 401k.
Interesting.
Right? And they it's all click and they all get it. Like, my gosh, wow, this is great. Yeah. So that's that process.
That's a huge tidbit, man. April 15th for IRAs. I don't know. That's right. Well, a lot of folks know that.
Well, again, that's very important that to know, learn, and teach all this stuff and get intimate on how all the taxes work on your filing dates and IRA rules. This one here with the 145, you got to be careful of their income and be familiar with the AGI limits, right? Okay. So you go back now and they've got a 401k money. That box was checked back on the W-2.
Yep.
That's where the conversation goes. Making money, losing money. You're not contributing enough. You could save more by contributing more, and talk more and go that direction with the conversation. Right?
Gotcha.
What would that do for us? Well, if you're not maxing it out now and you're below those AGI limits, we can fund an IRA right now. Right? Okay. Well, H&R never said that, and Liberty and my CPA, and you go, that's okay. I know we're cheap. You said that earlier, right? You were cheap, and you're here. That's great, but it's not about being cheap. It's about providing value.
All right. I'm interested to learn more on that. So the AGI, explain that a little bit more.
So AGI, it's on that Quick Finder. If you have a program checked off on the W-2 at work called a retirement plan,
Yep.
if you squander that and don't use the plan available at the office, I call it, if you don't use that plan, the IRS says, shame on you.
Yeah.
We allow you to contribute through them that are offering a plan with match money perhaps, or whatever it may or may not be, and you just don't do that. Sorry, you can't do it in the outside world.
Right.
You squandered that, but you can use a combination thereof. If the box is checked, you're below a certain AGI, okay?
Okay.
You're below a certain AGI, you can still contribute to traditional IRAs outside of that office plan.
Gotcha.
So that's where that familiarity and all those moving parts and say, well, why are you doing it? You just reverse the conversation. Why are you putting money in the 401k? Well, it's just to get my match money. You go, that's wonderful. Sure. Why else? Well, I don't know why else. Well, look right here on the W-2. You're not paying as much tax in a 21% tax bracket, right?
Yep.
Know the tax brackets. It's on the Quick Finder.
Yep.
They're right there.
Yep.
Because it's going to segue into the other tax returns here in a minute.
Okay.
Know those tax bracket thresholds and say, but you can still contribute outside of the workplace and put that money back in your pocket right now that's sitting in savings that's going to pay you 21% interest. And I joke about that. It's not as tax savings, right? Instead of 0.0001 sitting in your tax in your checking account, they're going to give you 21% money on the $15,000 you put in here in the IRA.
So they're not contributing to the employer plan at that point, or they're contributing a small portion, just the match.
You got it.
In that
That's
instance,
right.
And then whatever left they can do to
A difference.
Okay, gotcha.
Yep. You got to catch up 50 and
If you
above
can,
and 50
right?
and below.
But I mean, what if your employer match and your salary's high enough to where that's hitting your max contribution limits a year?
So that, knowing that already, you should know that at that when I review that return, I'm going to find my talking points, and right then and there, it's, are you 59 and a half, right? If they're 61, I'm going to start having a further conversation about a risk that they're taking, other types of planning down the road.
Sure.
What do you know about RMDs?
Sure.
Their eyes start rolling back and they're like, holy cow, right?
Yeah.
You've heard that. You had me from hello here. Let's do a follow-up meeting here because this is getting deep, and that's where that, when we start talking about those kind of things about future tax planning, and what are you going to do about that once you retire? Social Security. Again, we'll get to that in the other ones, but those plays are, you're hitting all those highlights about what are you contributing to, especially with the market volatility.
Sure.
You put your money in there and then you lost it 6 minutes later.
Right.
What good is that doing you that you saved some taxes, but you lost the money?
Right.
Okay. So that's part of that.
But that's interesting. I know one of our examples is pretty shining in that light, right?
Yeah. And again, I know this 145,000, the way that this one plays out, and I would be prepared with a different conversation with this individual had they had the box checked, they're maxing it out. I have to turn my conversation a little differently for that person.
Sure.
Okay.
So what's the play with this guy right here?
With this guy, because the first one is, I already know you have non-qualified money. Don't know how much we can talk about that. Putting the tax funding IRAs for the husband and the wife right now. In the back of my mind, again, that 401k will be a further conversation, but on the front, I got a deadline here by April 15th.
We're going to save you some money right now.
We're going to save you thousands of dollars.
I'm going to be the hero.
That's right.
And obviously, you're going to want my advice on when I offer it somewhere else.
That's right. Yep.
Gotcha.
Once we get into,
but you're in their trust right now. It's like
exactly.
Yeah, that's all this is about.
You've heard. Everybody goes, well, what are you selling? Like, sir, I'm just trying to share with you some value here. Okay.
You're expressing that you're an expert,
if you don't see the value in contributing to IRAs, saving $1,000 in taxes, it's been wonderful visiting with you and nice to know you. Come back next year and we'll do another cheap tax return for you. How's that? And they're like, Weisenheimer here. Okay, great. Or they go, click, lights, bulbs going on. So what'd you say about that IRA thing again?
Yeah.
Right. We revisit that. We set that appointment up to fund those IRAs. There's really nothing more than that.
Right.
But then at that point, they start asking those questions beyond that. What do I do with my 401k? Well, I'm glad you asked that. And that's on the second or third appointment after we've done that IRA.
What if they don't offer it? You broach the subject?
Always. Yeah, that's all in follow-up conversations and all that. I just want to get in, make them a customer, make them a client, help them with some tax advice.
That's so true and in so many other things. It's like if we could just all as a industry be willing to just make people a client.
That's all it is. What did I make on that? What did I make?
Yeah.
You know what I make on a funding, a money market IRA for a client? You know what my fee is?
Right.
0.
Oh, really? You don't?
I don't charge on.
Well, what's the point?
Fees on cash on a money market that's 0.001.
A percent for
Yeah.
$10,000, $13,000.
But they appreciate that.
Right.
See, but I did the work for them. They're now a client though, right? And then once they get that, they're going to go, how do we invest that now? Yeah. How do we invest the money market money now?
Right.
Oh, well, I'll tell you what, come in, we'll sit down and talk about it.
Now you made your conversion.
And now
you're a financial client of mine.
Now you're a financial client. Now what are you doing with that 401k? What 401k?
Well, how we invest this money is going to depend on what you plan to do with the other money.
Bingo.
And blah, blah, blah,
there you
blah,
go.
blah, blah.
You got it. You're exactly right. And that's how you segue. And they go, oh, well, that's 450,000 there, and you got 15,000 here. Could we put that with that? I don't like them funds that it's in right now. Could we just roll it into that new IRA?
Yeah.
But, by the way, by luck would have it, you can. So those are the kind of things that you're building that because they don't have an advisor on the 401k. Don't get help with that old 401k. And you go, well,
Nobody's found it yet.
That's right.
Like who's going to find an old 401k?
Yeah.
If they're not looking for advisors and advisor. But anyway, it's an easy way.
But that's what but all that's answered through the W-2.
I know. It's just
right there. It's sitting there. It says, I'm not in one now. You make your hiring commitment. You just had a new job. They don't offer the plan.
Yeah.
Where's the old plan?
Yeah.
That easy.
Yeah.
And then you set up an IRA.
And it all happened from you fact finding a tiny bit in the beginning and asking about that 145,000 with no plan,
That's
plan.
right.
W-2.
Right.
It wasn't even the 1040 that it alluded to any of this.
Right. So we fund that IRA, make them a client, bring them back in and follow up. And again, you start doing this. And this year might not be the year for that 145 or that other 401k.
Maybe it's not.
It's not.
But the cool thing about the tax model is like you're swinging that back annually. Every single year they're coming back.
That's right. Hey,
especially when you saved them $2,000 in the first year.
Can we do that again this year? Well, let's talk about that. And it just opens up the conversation. So
building trust. And for the guy that's just cross-armed and doesn't want anything and is held out for a year, I know this guy's trying to sell me something and you don't sell him anything because you're going to get him back next year.
Right.
It's only a matter of time before he caves and he's built up enough trust with you to where he just wants to have a candid conversation about something else.
Something else will always happen.
Yeah.
That now puts it in my favor.
Yeah.
The ball's now in my court because whether it's, as you know how this has been with the COVID, you know how it's been with transition to job, you know how it's been with the tax rates changing, you know how the whole landscape's changing all the time.
Yeah.
And whatever it is on their side that changed, generally they're a client of mine, both in taxes and with that little piddly IRA that I did.
Yep.
And they're going to ask a question, what do we do now? This changed. What do I do now?
You're in the driver's seat. You really are. I mean, you're not gonna find them asking those questions to somebody else.
That's right.
It's just, I guess we're not here to preach. Anybody watching this is likely already committed to it, sees the light in that, but it's just shocking how powerful it is that you're always going to get the opportunity to sit there and talk. And either way, even if they have like a super long relationship with a guy at Ed Jones, they've trusted for years and years and years, love the guy, and eventually something's going to happen, creating a big market loss or something like that. And you're going to be right there talking to them.
That's right.
You're always going to be the bug in their ear.
That's where the tax season comes in. That is what I call as a business.
Yeah.
Being a business person instead of a sales guy. We had that conversation, but there's years go by, and there's times. I mean, when I say this, it's through experience. On this guy right here, I see the $900 from a brokerage account. I was the guy that cared to save him a couple grand on taxes. I had broached the subject of the 401k. We talked about that. And lo and behold, that next tax season, I did the IRAs, they're gone.
Yeah.
They come back the next tax season. Guess what I see? Yeah. If you'll simply go to box number 4A, and there's $450,000 in box 4A. And I go, what on God's green earth did you do? And they go, well, remember the $900? That was my Ed Jones friend, buddy, broker, advisor. And we gave it to him. And you know what my next question is? How's that working for you?
Right.
How much of the 450 do you still have?
Right.
Well, it went up. You know what? That's wonderful. You ever heard "Don't look the gift horse in the mouth"? Right? When at what point? And that's when I start talking other language. What's your exit strategy there?
Right.
It's your life savings, and you're 2 years older now. What's your exit strategy? And they go, "What are you talking about?
How are you going to take money out of it?" Right?
Yeah. What's the exit plan with the guy? He's a planner, right?
Yeah.
See, and I'd start throwing some rocks, right? Mm-hmm. I do. And they go, but I don't, but what are you talking about? I said, so you're telling me you went in without an exit. How important, how smart would that be as a planner to not get out? Because you know you've got to get out.
Yeah.
What are you talking about? I'm sorry, but let's go refresh back, right, to our very first conversation that you must start cashing in at 72.
It's happening.
What are you talking about?
Yeah.
What do you mean, what am I talking? And see how it goes?
Yeah.
Now, okay, let's step one. Advisor, value, taxes, RMDs, withdrawals. When are you going to exit? Where will it be? How much will you have? Mm-hmm. I don't know. I have no idea. He says, and you just start saying, well, he says what? Don't worry about it. Okay, how's that working for you? See? And that's where that
He's
money.
a fiduciary. He'll act in my best
all
interest.
that stuff. I say, oh, he threw the F-bomb, didn't he?
Yeah.
Right. No, not the bad word, the fiduciary word, right? Yeah. I said, well, gee, did he just recently become one since it became hip and cool? Or I've been one for 20 years before it was hip and cool.
Yeah.
All that stuff. And go, but what did it do for you? Mm-hmm. Right. And their answers are, I have no idea. What's your exit plan? I have no idea. And then I go, well, if you want one someday, all we're here to do is a silly, cheap tax return thing. If you ever want one someday, you just let me know.
Yeah.
Right. And sure enough, it just, well, the next year wasn't it. And the next year wasn't it. And lo and behold, it happened. Okay.
Eventually they're going to start making mistakes with their exit strategy, and you're going to be there to see it.
That's right. Right. And that's what the tax business is. And you're not going to get in and get out in tax season and end your career. It's a lifelong business model that just keeps coming year after year after year.
It never stops.
They age up, circumstances change, life changes, and so on. So,
all right, let's move to this next one here.
Next one.
Because this is an interesting one. George Pine.
Yeah, old George and Pat, actual real clients, obviously not their real name and social numbers, but these circumstances come in. You better start knowing the tax return pretty intimately by the time you get one of these George and Pat ones. Okay. A lot of moving parts, already retired, no W-2. But all the moving parts on this tax return is familiarize yourself where your break points are on taxation. You know that wages are fully taxable. You know that IRA that moves over to 4B is a taxable portion. Mm-hmm. But your dividends, your Social Security benefits, know those thresholds. But you go on down here, that's a neon sign when I'm reviewing the return is line number 7. And it's a parenthetical statement that sometime at some point something didn't go so well. As I'm reviewing this return, I dig further into what is the source of that carry forward loss. I look at his pension and annuities. Is he getting a pension or is he drawing from an annuity? Back up on line 3B, again, he's got dividends coming in. Are you spending those or reinvesting those? These are in my review of this return. I'm making notes on a Post-it note or in a file before they ever come in. Okay. Because I don't know all those answers. Right. Because it's 1099 documents.
Questions prepped before you go into
That's right.
For sure.
Because so I do that. I know that the Social Security, why are they paying? It's taxable. Could be very legitimate if he has this pension thing, right? That changes the whole story.
5A line, 38,000.
Yes, sir.
Okay.
So 5A, moving over to 5B, could be pensions or annuity withdrawals. But when you go to 6A, that Social Security, get to know the thresholds of where Social Security becomes taxable.
He's like,
and this is important too.
Yeah, he's getting darn near every penny of that Social Security tax.
Right. So that's where familiarize yourself with, and and this is something I go, look, we're here to educate and help, right? But just because something becomes taxable doesn't mean you owe taxes, right? But I am concerned of what becomes taxable because sometimes that can be controlled. You can throttle that amount back of Social Security depending on the answers to the questions I ask about line 5A, about your dividends, and down here on line 7. So I'm still in my prep. The client's not in my office. I'm digging in.
Yeah.
Well, in this one in particular, Alex, my curiosity is up because I see that this guy's got a carry forward loss. Times have been pretty good.
And he's got a $3,000.
And he's got a $3,000 loss. So back in those days, I look and I go to his Schedule D. When I look at Schedule D, I see that there is approximately $4 million.
Ooh.
And the word that comes to mind that I don't know where I got it from years ago, but it was, this dude's a whale.
Yeah, big whale.
Okay.
Yeah.
He's a big whale.
Common sales.
This guy's got a $4 million portfolio,
Jeez.
right?
Yeah.
Things didn't go so well, but out of 4 million, he still has 3.8 left because he lost 188. Okay. You then go on down to the shorter term. Well, things went better in the shorter term than they did for his long term, maybe cut and run or whatever it was. So I'm formulating on my little Post-it note my questions I got to ask him, right?
Okay.
And this is where, so I prep myself for this meeting, dig in a little further with it, and formulate the conversation when they come and sit down for the first time on the delivery. So start asking a couple of questions. I give them the whole warm-up spiel about value and help and some of this. And what are you living on today?
Right.
I know that they're under 70 and a half at this time, not today, but they're not RMD world yet. So nothing out of the IRA there.
Okay.
What are you living on? Well, we live on our Social Security, got a little pension, but we live on 50,000 or some number. I said, well, by golly, you got $67,000 of income. What are you doing with your dividends? Well, we reinvest those. Okay. So you're not taking the dividends. No. Well, then what's your pension amount, right? So if you take the pension and Social Security, you start adding some of this up and you go, well, his pension's $1,000 a month. But you got 38,000. Where did that come from? Now I already know the answer, right? Because I found out in other documents, he took money from an annuity.
Okay.
One of them annuity things.
Annuities.
Yeah. Them annuity. I got an annuity or something. I don't know.
Yeah,
but we took money out of there because we needed money to live on.
Okay.
So we just took it out of there. You just took it out of
Unadvised.
there. Unadvised. Just took it out of there.
Gotcha.
And so you got non-qualified money in on dividend portfolios, you reinvest in that. You've got capital gains let's talk about that a little bit. Looks like you had about $4 million in trades. Yeah. And she looks at him. Okay. You got to watch body language. She looks at him.
Like,
$4 million. Where'd you get $4 million, George?
Yeah.
And he's like, don't worry about it, honey. And it's all good. And I said, George, so you got $4 million in trades. Didn't go so well, I guess. Yeah. I've been buying and selling stuff. I said, how often? Well, lo and behold, he's got about a $400,000 portfolio. He traded 10 times during the year. Right.
God.
So the wife, and he says, you lost how much? Sorry, but that was $188,000 he lost.
But not of $4 million.
Not out of 4 million.
Is that what, 500?
So remember the whale?
Yeah.
Wah, wah, wah.
Yeah,
right?
much less, yeah.
But still needs some help here because now we have a serious problem because I got someone in the room that's very concerned, and that's the wife.
Sure.
So we start just having conversations about sources of income, types of income, taxation on income. And we begin to talk about why are you reinvesting tax-free money, pulling taxable money from an annuity? I say annuity at that point, of course.
When you have the dividends coming.
You got dividends coming in that you're reinvesting in, and more than likely reinvesting in something that went down in value as well. Might have gone up in value, but it's $11,000 tax-free. So if we can create more income from the other part of the portfolios that are dividend and capital gains and start living on that money. What we didn't talk about that's not on here, though, is his IRAs. It's not on here.
Right.
You don't know how much in IRAs.
You won't know that unless they're taking distributions from them, which they're not.
That's right. So
unless it's an annuity.
They begin to have she mostly begins to have questions about what on earth is going on. And secondly, he starts asking some questions about where are the moving parts? Why is he paying so much in taxes? Because Texas stink.
Of course.
And I say, well, why don't we, if we could rearrange this table and you still stay on the drugs, right? I call it stock market drug, buying and selling. But if you do that inside your IRA, you don't get all these 1099s.
Yeah.
Right?
Yeah.
And you don't have a paperwork nightmare here, and you don't have all these losses because it's going to take you a lifetime at $3,000 a year, or depending on what kind of planning you do you have any gainers that you could harvest? Well, yeah, those don't show up on here. These are all the
gainers. What are you talking about?
So he has what's called non-realized gains.
Right.
These are the realized gains of transactions.
Yeah, but
he has appreciated stock portfolios that she has that they didn't sell.
Gotcha.
Right?
Gotcha.
That are non-qualified funds. He just didn't sell yet.
Yeah.
So, well, then we need to talk deeper and maybe harvest that and accelerate this carry forward loss and eat into that faster, rearrange the table. If you want to do the drugs still, the trading, do it inside your IRA, but quit doing it on this money and eat up that carry forward loss.
Gotcha.
So it's nothing but opportunity across the board. And when you start looking at where he's taken out of that fully taxable annuity, we actually drove his portfolio, his planning to where that 12,000 pension, the Social Security moves back over from the taxable side of 6B back over to 6A. He starts living on dividends tax-free. We actually start what's called Roth IRA conversions.
Gotcha.
So we're going on the next example, kind of talks a little bit more, how does that work? Because what you do is you begin in no math, is you got your carry forward loss, you have your taxable income moving back over using more tax favored and tax-free, because dividends and cap gains are tax-free till you hit the 21% tax bracket, which last year I think was like $80,000 of fully taxable, where these side items are tax favored and you live on that money.
Gotcha.
So now you drive his income. The $20,000 from Social Security moves back over to 6A. The 5B goes back down to $12,000. His $11,000 dividends still stay there. Has a little bit of a side impact on Social Security, but not as drastic.
Gotcha.
But you got on page 2, your 12C, you have standard deduction of $27,800. So what's $25,000 minus $27,800? You're in the whole $2,000. Right. So just nibble away at an IRA to Roth conversion there. Right.
Gotcha.
Or harvest more cap gains to live on with no taxes. So again, there's a play there tax-wise to drive him, and now you save him this $3,000 he's paying in taxes right now.
So interesting, man.
Okay.
And you made him a client at that
And made him a
point.
client.
It's the same story as our first example.
That's right.
You saved him a few $1,000s, and now he's forever loving you.
But she's the key that I see though. The wife is now more comfortable.
Yeah, she's like, man,
because it's like, what's going on here?
Right.
How do we lose? But how can we save that? How are we going to be okay? So it eases quite a bit of tension there, and turns this story into saving that $3,000 in taxes, putting the money in their pocket. Now they don't need to take as much out from the portfolio, especially that annuity, had to take out more to pay the taxes on it. So now you're saving them that money, and now they have to sell less, get out of less to have the same income. Because it's just tax savings alone. So
interesting, man.
A lot of moving parts. You got to get intimate with it and know.
You really got to, I mean, it just speaks to, you got to log your hours and get familiar with the form to see the opportunity to help this sort of client.
Well, here's, you bring that up, Alex, but I'm staring at you and you're staring at me over here. You've got this weird device. I've got paper, right? We had this conversation a little bit and everybody's go, oh my gosh, I got to know about all this stuff. And holy cow, Tony's making my head spin here of all these moving parts, and go, yeah, but you know what? Why don't you slide that iPad over here and look how dorky I look trying to work it, right? It's second nature.
Yeah.
Right?
Yeah.
And once you get into it, it's just second nature to know all these moving parts, where you're going to focus on that delivery. Know the return before you deliver it,
right?
Where your talking points will be, and the light bulbs just start going off, and they just like, wow, I didn't understand that.
Do you remember in your first year, like how confident were you when you jumped into this stuff?
Kindergarten.
Yeah.
I just followed. I followed a process.
Yeah.
Right.
Yeah.
Got intimate with those focus on a couple of those highlights to really know and understand whether you choose dividends and cap gains, whether you choose taxation on Social Security, whether it's just a basic of funding an IRA.
Right.
Just funding the IRA, you make them that client.
Yeah.
That's it.
Yeah.
Right. What do you call it? Low hanging fruit.
Yeah, sure.
Something simple. Make them a client. Build your confidence. When you start showing that you know what you're talking about and that you care about them, that sounds cliche, but you really care about saving them on something, because what are you getting out of this right now?
Right.
Nothing.
Yeah.
You pay your $129. Guess what you get?
Right.
You get all this, right? And that's where they go, wow, holy cow.
That's
right?
great.
That's where you start building that bridge.
Year one, you save them $3,000 for
Year one.
$129.
Yes, Sam.
It's just a huge,
That's it.
huge benefit.
It is. Yep.
All right, let's move on to our next case here.
Next one, a little closer to home, mom and dad. These are stories. This was my mom and dad, obviously, to protect the guilty. We black out some of the stuff, but this is a real story. My dad worked for a little company called Bethlehem Steel.
Okay.
Families don't talk about money. This is where it gets really personal.
Yeah.
And that's where my dad had a pension, got right-sized, downsized when he was in his mid-50s.
Oh, wow.
Bethlehem Steel subsequently went bankrupt, right? Families, Italians talk about food, not money. Never said anything about what their whole plan and what they got in the bank, what they got in the 401k, all that kind of stuff. So we start talking just briefly. My mom's in one ear, dad, your dad this, your dad that. You know, my mom, was like, why is he freaking out at tax time? Blah, blah, blah. I said, so I talked to my dad, start digging a little bit. And I said, Dad, what is going to come in from the pension? And the hardest thing for me to hear about this was my mom, when he said, and my mom heard, I don't know. I don't know. Dad, of the 2 Social Security checks that are coming in right now, right? How much will mom get? So you don't know what she's going to get of the pension, which was $600. What is she going to get from Social Security? He said, well, I know the answer to that one. She gets the bigger one. I said, that's great, genius. I said, but what happens to the littler one? He goes, it goes away? That's right. So mom takes it in the shorts. We don't know on Social Security for sure. Right. We don't know on the pension, ring pension board. His $600-$700 goes down to $90. So mom's facing about $15,000, $18,000 income loss in the household once he croaks. So family starts talking. I start talking a little bit about more. He's got 401k, mutual funds, the whole 9 yards, the whole world. I said, but we need to set up a backup plan. Well, he sends me his tax return, and it's this first tax return, which is the one where you see the $12,000. He's getting that, and he was drawn out of, I think, out of his IRA or something, which should have been up on 4B, but for illustration purposes, it's all taxable money. So you notice on his Social Security is $29,000 and 0 of it's taxable. That's great, right?
Yeah.
But his line 5B, he's got $12,000 coming in.
Okay.
Well, you flow down that tax return, and page 2, he's got $27,800 of standard deduction.
Sure.
So I said, Pop, what's 12 minus 27? He goes, I mean, this is what's funny. They go, I don't know. I said, dude, the negative number exists. It's negative 15,000. I said, but your tax return shows a 0. They don't put a negative there unless you have an NOL. So you got 0.
Right.
So what's your tax on 0 income? Follow it down. You don't owe any income tax on negative 15. I said, so Dad, what we need to do is start preparing for mom with your IRA, your 401k, putting money aside in a Roth IRA to replace the loss of that tax-free Social Security money.
Gotcha.
And he goes, but son, I'm not stupid. If I pull money out of my IRA, I owe taxes on it. And I said, Dad, just remember this. Just because something becomes taxable does not necessarily mean you owe taxes. See, look at the taxable amount in 5B. It's taxable.
Yeah.
But you're in the hole. I'm going to teach you to fill that hole with an IRA distribution. Instead of distributing to your pocket, we convert it to a Roth IRA at about. There's a side effect here, like all medications, so is taxation. Depending on the dollar amount, we can only move so much over that's converted because you're going to have Social Security moving taxable as well. So we work with the tax return software to get you to a threshold to where you convert X amount to the Roth
without sacrificing the Social Security tax.
Without Social Security will become taxable, but not sacrificing taxation on it. So you notice that he jumps on the next example. About $12,000 gets converted, right? $12,000 more out of IRA to Roth. A little Social Security moves over.
Well, let me pull up that other document there. Wait.
And so if you notice, you see on yours, you can on 5B, you can put Roth conversion with your cute little pen thing.
Mm-hmm.
Roth conversion of 12,000.
Wait, where are we at? 4A?
On 5B.
Or 5B?
Yeah.
24,000.
So you put 12 of it because he was already taking 12.
Okay, so 12 of this 24.
That's his pension.
Was his pension.
And some distributions. So he has 12,000 Roth conversion.
The other 12 was Roth conversion.
Which is tax-free, but scooted a little bit of Social Security over to 6B.
Gotcha.
So again, it's not a dollar for dollar. You can't just convert from the first tax return that full 15, 16, 18,000.
Right,
okay?
right.
If they feel like they want to pay some income tax on the conversion once they really get it, you can build it however you want and convert as much as you want.
Sure.
Okay.
Sure.
But in his case, he said, I don't want to owe him a penny.
Right, right.
So I said,
keep his taxation at zero.
At zero.
Taxable income at zero.
Right. So now in one of them annuity things, right? Annuity, FIA, with riders and income benefits on it, we convert $12,000 a year for about 8 years.
Wow.
Right.
Wow.
And the Paul Harvey, the rest of the story, my dad died.
Oh, wow.
So now we backfill. You don't have her new return, but now her Social Security that she lost her paycheck on, that was tax-free money, we start Roth distributions from that
IRA.
And from the Roth IRA that replaces tax-free money that she lost from Social Security. And you know what my mom still gets to do, or did till she remarried, by the way. But she could still do Roth conversions because she was living on Roth money, which has no side effect on her Social Security, right? So we still take a little RMD, but convert the balance because she has zero taxable.
So she inherited the remaining balance. Was there a remaining balance of the IRA?
Of course, yes. Yes.
So she inherited that and continued to convert that.
But the RMD was less on it. Right. Because there's less balance in there each year.
Sure.
He had less RMD, henceforth increasing the Roth conversion every year. And now more and more Roth was traditional is converted to
software
Roth.
to help with that, to help with figuring this all out.
Drake software will do this for you. Drake just helps us. Our software platform allows if this, then that. So I just build a 1099.
Yeah.
And I say more of this, IRA to Roth conversion.
You just keep playing with the number.
Keep playing with the number, right? Because at those thresholds, the 50%, 85%, more and more moves over. So you just let that standard deduction wipe it out, right? Go back to George, though, right? That other previous return. You start having carry forward losses, you can eat in a little bit more, can't you?
Right.
So you have more, you have standard deduction and a 3,000 carry forward. So the software allows you those moving parts to move and convert the right amount.
Very interesting.
But
That's very interesting.
But here's what's here. Let me just segue for a moment, right?
Yeah.
Most people think tax season is Feb 1 to April 15th.
April 15th, yep.
So with these conversations, they may or may not be a client of mine at all. And I say, you know what? Based on your scenario, you need to be back in my office in the final quarter of the year, and we'll talk about these Roth conversions. And my book fills up in the last quarter of the year to talk. And do you know a lot of things can happen between April 15th and October 1st?
I don't doubt it.
And you put a list of whatever that might be, right?
Yeah.
And whether someone died and they inherited something, whether they sold the rental property, what are we going to do about that? And so on and so on and so on. It's just tax talk all year long. But my book fills up to do these Roth conversions in the last quarter of the year because I don't want to surprise. I don't want to convert in April, right?
Yeah.
And then they have some weird anomaly. There's been several of those that occur.
Yeah.
Some pension payout thing. Somebody got goofy and took an IRA distribution, took money from the wrong account. Their broker did something, sent them money from the wrong account, didn't tell me about it.
The plan you had didn't work.
Right, because I don't have all their money. I'm not their full trusted advisor yet.
Right.
But in November, October or so, we have a conversation, say, how did the year go? What did you do? and then we do a Roth conversion on the proper amount.
Smart.
Okay.
A lot of people be like, yeah, I'm just going to take the opportunity to start that, Roth conversion ASAP. Get
Right.
the money in, you know.
Now, if you know your year's going to be, right, but from the tax practice, you're building appointment setting and consultations that I can book already on my calendar for later in the year
Yeah.
to have that dialogue.
I agree.
And they might have lost their job. They might have retired in the middle. They might have, and 401k money comes available and so forth. So
Yeah.
that dialogue every year, all year, tax talk the whole time.
Right. That is definitely the common sentiment with guys that have tax practices. Is like their illusion before they came into it was it's a February to April thing, and then they get back to doing workshops and don't have to think about taxes anymore for the rest of the year, and then they get into it. It's like tax practice really never ends. It's always the conversation, and then they have like a keen, like they just have a keenness towards the tax conversation in all things that they do, right? So it doesn't matter if they're talking federal benefits with folks or if they're talking from a Social Security workshop that they did. It always comes down to the tax conversation because it's like their trump card of, things that I know that your guy doesn't.
That's exactly right. And I almost always drive the beginning of conversations around taxation.
Yeah.
It's an unknown world.
Right.
And knowing and digging in and delving in and be a specialist in that area, it never ends.
Yeah.
The conversation never ends because the law is going to change.
Yeah.
Okay. And has and still is evolving right now with RMDs and those dates and qualified funds and annuities now being into qualified plans now, employer plans. And that conversation is going to get more and more your deductions, exemptions type thing.
Yeah.
Taxes on the dividends and capital gains, that's going to continue to evolve.
Yeah.
So
It's interesting. It's like, if I'm going to think about the financial world, though, if I'm looking introspectively, looking at myself in the mirror in the morning, and I was like, if I could learn one thing that would increase my closing percentage, and I don't know taxes, let's say I don't know anything, in the retirement planning world, taxes would be the thing that would increase my closing percentage far greater than anything else. It's the question that every one of our advisors should ask themselves. It's like, if you want to increase your ability to close on prospects, you need to figure out something that you offer that everyone else doesn't, especially if you're doing something like Social Security workshops. It's like the most mundane workshop that we have in our industry. Everybody's doing it, right?
Yeah, sure.
So how are you going to be different when they sit down with you or get to your workshop? And are you going to be able to talk about something different? For some, that's estate planning. I know plenty of folks that, learned estate planning to some degree. And that's one thing that they harp on at their workshops and then in their appointment process later on. And good for them. It works for them. But I'd say far and away, the one thing that scares most advisors is taxes. One thing that scares most people is taxes. So if you're one of the few that understands it and can help people make it easy, make it simple for them to understand, like you just did for us, it's a home run. No more would you just be closing the layup deals with the people that don't have an advisor. You'd be talking with anybody and everyone that has an advisor and isn't talking to them about taxes because, again, it's maybe less of an issue while working and more of an issue in the distribution phase. Maybe it isn't actually. I don't know. But it's certainly something that the grand majority of retirement planners don't talk about at all.
Right.
Avoid.
And
it's egregious to think about. And I was just thinking about this the other day when I was reading. You're talking about expenses that are in post-tax dollars, right?
Sure.
And you're putting plans together in pre-tax dollars. Most advisors.
Sure.
Most advisors are doing that.
Sure. Gross.
Yeah,
not net.
Like here's your annuity payout.
But this is where, I again, throwing rocks, right?
Yeah.
Your advisor, this is when we're starting to get a little closer and I got to drive that wedge.
Sure,
okay.
Sure.
And I go, how do you feel about the word negligence?
It is negligent, though.
So your advisor, your advisor says, well, don't worry about those. Don't worry about the IRA. Just everybody owes taxes.
Sure.
I said, and withhold 15%. You go, right. Well, that's just of that distribution.
Right.
What's that medication side effect again? Memory loss or dry mouth? Well, you have taxation now and taxes owed because of where he sent it and how much he sent of your Social Security too.
Yeah.
right? So
Yeah, there's the side effects.
Right. And this, I get into my little crystal ball, how many of you like to have that crystal ball to look into the future? Well, guess what? I hold it in my hands. I have the ability to do that.
Yeah.
I take this tax software and I say, based on dollars today, dollars you may or may not have in the future, wink, wink, right? Or you're in control of this one, right?
Yeah.
That what you will have or might not have in the future that you have to take an RMD on. So let's just fix the dollars today. You got the same amount when you're 72. I'm going to put an RMD in here. Okay. And let's do the side effect and see what it does to your taxes.
Yeah.
You know what they do? They skyrocket. So I can pro forma out into the future, right? What those people are doing, right? What their advice might be, and just shred it because
that's
they don't
today's tax rates too.
They don't. That's at that's at today's tax rates.
Like where it could be.
That's right.
Yeah.
Well, they lose a spouse during that period. What happens? Standard deduction drops in half. Taxation doubles immediately.
Yeah.
Right. Or brackets change immediately.
Brackets change a little bit. Yeah.
Right.
Yeah.
So your bracket changes in half. Right. So your income again. So that tax conversation all the time. And you can pro forma it out, the what ifs. What if I was to sell that highly appreciated stock?
Yeah.
Well, I give my safari elephant hunt. You drop an elephant on a safari, you're going to have one big barbecue?
Yeah.
Or are you going to do it like we did the Roth IRA? Why don't we sell some of those shares in increments, pay zero taxes on it, zero or no tax on the Social Security as well? That's what the software does.
Yeah.
I can just pro forma it to certain thresholds. Some people say, but Tony, we need a lot of money now. It's November. We need a lot of money. I said, well, can we orchestrate now? We'll split the tax year. Why don't we do a withdrawal or a cash in sum right now? January 1, we split that tax year and meet the need with no taxes.
Yeah.
See? So that's where that all conversation and building that relationship comes in, that when it comes to money, that the tax season starts with building a relationship that please come ask my advice, not my permission, if you're doing anything. We already got this person. We already have someone. Go, yep. And what are they doing for you? And the light bulb just go off. They're not doing this for me.
No.
Right? Now you understand, Tony, we already got a guy. You understand, I got it.
Yeah.
Right?
I understand.
But you know what? Value after value after value over the years.
It takes a lot of the ifs and turns them all into wins. It's just not if they're going to work with you. It's just when they're going to end up folding.
It's when
it'll get closer. Like as they bleed into retirement and start taking distributions and seeing the tax effects of poor planning, it's just a matter of time,
right,
before they're looking for your advice to fix it.
And the best advice I can give, and this has been conversation over the years with a lot of guys, it can be frustrating.
Sure.
Right. Look at yourself in the mirror. What is your delivery? How's the conversation? Are you being too harsh, too soft, throwing too many rocks, as I say? But begin to consider it as a business model, not just an activity of flurry to sell something.
Right.
Be that full and consummate advisor, and they're going to eventually know that you care about everything that they're doing and that you have the tools to take care of everything
for sure, all
day, all year long. And it's a business that you can use all year.
Yeah.
Some guys say, well, I fired that client, or I got rid of them. They were rude, or look, I've done that before with only those that disrespect my staff. Okay. You can beat me up all you want. Right?
Yeah.
But don't disrespect and do that. I will get rid of you. You can go somewhere else. However, those that frustrate you because they're not following and doing and what you're just you've seen where you just sit back in your chair and smile and just say, thank you for coming to us and trusting us with doing your taxes again. And we'll see you next year.
Yeah.
That's it.
Yeah.
And that book fills up. And eventually what happens?
They cave.
Something changes.
Yeah. Or something changes, right.
And whatever it might be, and that's death, divorce, change in workplace, change in tax status, whatever it might be. And they go, well, we've known him for 10 years.
Yeah, I got a relationship.
Why would you not ask? Why would you not, And sure enough, they come in and go, man, we've been here for 10 years, but we've never, okay.
We're shocked.
Yeah.
Yeah, we haven't ever asked you for something like this. Yeah.
But after, 500, 800, 1,000, 1,200 tax clients, you're building what? A business, a base
for sure,
of recurring revenue and people coming through your door all year long. So, I don't know.
And we talked about like unseen benefits or unrealized benefits. You've said this many times. People like to do business with people that are busy. Your office is always busy as a result of doing this tax practice year over year. People are always buzzing around. You've got a well-employed staff that's over there. The aesthetics are right for somebody that might not be, getting that same aesthetic from their guy. You know what I mean? Guy might be just a sole proprietor that's doing their planning, or it might be their brother, or
Sure.
their family member that doesn't really know what they're doing, managing their assets, and all of a sudden he's sitting in a highly professional office. Sure. And that might be a few years down the road for some of the folks watching. They're just starting their tax practice, but eventually the aesthetics of tax practices, and I've traveled to a ton of different offices of advisors across the country. By far and away, the tax practices are the ones that look the most professional when you walk in, by far and away.
Oh yeah.
And there's buzz about it. How many tax returns did you do this year?
This year, probably 1,200.
1,200.
That's our goal. So
I think most advisors would be shocked to see 1,200 people walk through their door in 1 year.
Well,
probably in over a 5-year period, they'd be shocked to see that kind of number.
Well, remember, most of my clients are married. That's 2,400 people through my office doors.
Yeah.
Right. Yeah. In 10 weeks.
Right. And 4,800 parents of those that could leave an inheritance to those 2,400.
Keep going.
Yeah. I mean,
keep going.
Right. You could keep going and going.
Keep going.
The money
right.
keeps going through the train.
That's right. And again, that's what this model does. Right. Mm-hmm. If you're apprehensive, you're not sure, you're not confident. That's what Megastar does. That's what us as other offices do.
Yep.
That we are resources to go to talk it and go, sure. Hey, I've got this going on, or what about this snafu I've got in my process?
Yeah.
Right.
Yeah,
Some people's process. I have a process that's unlike anybody else's.
Yep.
It works for me.
Yep. It's a style thing for sure.
And the way the flow of paperwork and documents and everything goes in my office is it's a well-oiled machine. Are you going to carbon copy it? Good luck. But can you implement some of those things? This is old school, but sometimes you take a page out of someone else's playbook.
For sure.
You got a little bit of a problem. You go, what can I do to modify this process? And man, things just flow, right?
And that's where, the support of the culture here just bleeds that. There's always a helping hand that's willing to say, hey, this is how we do it. Might not be what you're looking for, but adapt it for your stuff,
right. Your style. And and again, those resources are vast, and you may not like the way I do it, but I've on the fly every tax season, I change my own style in the conversation about all this paperwork. Right. It depends on who's in front of me. What's their posture? What are they thinking? What's the timing? And just change the delivery a little bit. And it's like, oh, here we go again.
Right.
Been here for 4 years, and sometimes I'll pull my tie down. I'll sit back and go, you again?
Yeah.
You've beat me up for 4 years of how cheap my taxes are, how my chocolate isn't dark chocolate. You drink my whatever and go, what do you need from me? Just your tax return?
Yeah.
And then they go, I have a problem.
Here's what happened.
And I go,
I won the lottery. Happened twice to Lee.
Whatever it is. Whatever it is. And I go, well, just share with me where I can help you. Sure. I don't go diving in now and licking my chops and go on and share with me what's going on and what can I help you with? Yeah. And they go, all right. And it's like, wow, that's through, year after year after year, it just keeps feeding and keeps people coming through. They got to get their taxes done. Yeah. So pretty cool process.
Beautiful stuff, man. Thank you for sharing it. And thanks for walking us through this. I'm sure there'll be tons of questions. Maybe we'll do a follow-up if needed, but
sure.
Appreciate the time, man. Thanks for being here. Thanks,
welcome.
Everybody, for watching. Hopefully it's helpful. If you have questions, reach out to Megastar Advisors or anyone on our staff. We'd be happy to help you better understand anything that was mentioned in the show. If you're looking for the examples that were used today on the show, those too can be given to you by your representative here. Again, thanks for watching, and thank you, Tony. And we'll see you guys next time right here on Coffee for Closers. Thank you.